All right, welcome back, boys and girls. We are going to review today's price action on indices, specifically for the PM session. As I mentioned, I was bullish on it, and we will review why I believed we are bullish and some of the trades that I've taken also. So on my Telegram channel, that is always free, right? And the link is always under every video. I mentioned at 1:40 p.m. I said PM session looks bullish to me for NAS and S&P. Possibly new highs on NAS for the day. Let's see. And pay attention, I only mentioned new highs for Nasdaq. I did not say S&P in this case, right? That's important. I'll explain in a moment why I felt that Nasdaq was a stronger index, okay? So let's start looking. Today's price action, we had this huge displacement with the 8:30 a.m. news. There was CPI news, I believe, right? So we created this imbalance. And we had this short-term low taken out with this candle right here. And price rejected it and started going higher. So for me, this was my first tell that price broke this short-term low and rejected it, which was inside the imbalance. So this was my first tell that we're probably bullish. And if we compare S&P, it did the same thing. And the blue line you can see is basically when I made the post here. 1:40 will go on low time frames, so we'll see it. So same thing happened on S&P, right? The short-term low was taken out inside of the imbalance, price rejected, started going high. Now, pay attention to this, very important. Let's remove this. What I'm going to say next is nothing new. Again, this is something I picked up from my own experience, and I believe recently in one of the market reviews, ICT actually made pretty much the same comment on price action comparing price action on euro dollar versus the pound dollar. I believe it was a daily chart or maybe 1 hour. I'm not sure exactly. But one of the recent videos, he mentioned this, what I'm going to tell you now. Very important. You can use this in a way as you would normally use SMT. So anyway, we had this imbalance. And if we zoom in closely, we see that this candle never came back inside of this imbalance. It just fell short slightly from reaching it. So never came back inside. While S&P had the same imbalance and price actually did trade inside of it, even just by a little bit still. So this was my number 2 confirmation that we are bullish and Nasdaq is the stronger, Nasdaq is a stronger index of these two because Nasdaq failed to go inside of this imbalance. So you see the logic I'm applying here is exactly the same as you would use for SMT divergence on the swing highs and swing lows, but using an imbalance. And again, somewhere in the recent videos, ICT mentioned this. So nothing new. I'm just showing how to apply this on a, on the actual price action charts, right? So since I'm operating on the 1-minute chart, again, all I'm looking is just 15-minute time frame. That's a high time frame chart for me. It's plenty to work with. I think it gave a lot of signs that price, in fact, wants to go higher, okay? Hopefully this makes sense. So this is the time when I made the post, right? So we already had these 2 confirmations happening. And then the third confirmation, why I posted and I was already in the trade on Nasdaq, we had this low taken out and then price aggressively repriced higher. We created an imbalance and price traded inside of this imbalance. So I did not see this on time, otherwise I would probably be already in this trade here. Well, let me remove this, you can see. So I just entered already. I was in this trade. Just on this candle right here. And my stop was somewhere around here, slightly below this low, because I believed if we are bullish, based on everything I explained to you, there's no reason for price to go below this low. Otherwise, if it does go, then I'm simply wrong, or maybe there will be another retracement lower before going higher, right? So small stop loss, 10-point stop or so. on this one, and this was basically 2 minutes before I made the post. And you can see, in fact, this was the high of the day, initial high of the day. 15 minutes later, Nasdaq did in fact spike above it. So this was a nice trade, 3 point something. I took partials at around 20 points for a 2R and then I closed Nasdaq. I did not, this was very, this happened very fast, so I did not close at the highest point, but somewhere around basically here. I closed, this was a good trade. And on S&P, pretty much again, I did the same, just dropped a little bit further. I entered on this I keep messing this up. I entered on this candle here, so after I posted, trusting, so basically I had 2 trades based on one analysis because I trusted this was actually a just a 1 point something scalp. Yeah, 1.6R scalp. I closed here on this candle because this is when Nasdaq took out, I closed my Nasdaq trade when it took out the high, and I closed the trade on S&P. So hopefully this makes sense. Basically looking at 2 indices, I make my decisions when to enter. So this was just a, again, I believe we should not go below this level, so this was just my stop. So this was a scalp, 1.6R or so. I closed the trade, okay? So hopefully you get the idea why I believe this was bullish. So this was, if we go back, really this price action here was my number 3 confirmation. 3 confirmations why I was bullish. I made the call. Again, I'm not going to tell you exactly when to enter. This is the whole idea. I'm just giving you my bias. I've been doing it for 11 months now. Every time I basically put my reputation on the line when I call market to go in a certain direction. And actually this week was really good. I made 3 calls, and all calls and all of them, hit my targets. The logic was explained, and the trades that were taken were explained as well. So this was it. So this might be kind of, these trades might feel like it's scary, or you feel like you're chasing price. But again, I'm just working with the data, what I see, price action. If I'm wrong quickly. My stop loss was pretty small, but based on my understanding on the market, this is what I see. And those were 2 great trades. Nice trades, pretty fast. And at the same time, as you can see, 15 minutes later, right? So Nasdaq did in fact create the high, confirming everything I've talked to you, everything I mentioned to you previously, right? Especially with the number 2 here that Nasdaq failed to make go inside this imbalance. Confirming that Nasdaq was in fact a stronger index, while S&P failed to make a high. Eventually, at the end of the day, it did make a high. I was not expecting that, I'll be honest, but that's fine. At the time when I was looking at price, Nasdaq was stronger, and it did deliver, and we created another high also at the end of the day. So this is the logic. So let's then look at why immediately when I posted, I saw some people saying, oh, it looks like, SMT on the highs. I want to go short. This is just my view of the market. And immediately after this, this happened, right? Price took out the high. There was actually a good short setup. Absolutely. It depends on how you look at the market. In consolidations or, on the low time frames, you like 2 different people can be one can be buying, another one can be selling within the same kind of couple of hours, and both will be right. It's just a matter of knowing when to get out. This was a long for me, good trade. If someone took this short, this was a good trade too, right? I did not participate in this short. So it really depends on how you look at price. This was, again, price took out buy side, displacement, imbalance. This was your ICT YouTube model entry. Great trade, absolutely beautiful trade. You take partials below this low here, probably you close out the trade. Great. But some people were thinking that they were saying basically, oh, but what about SMT on the highs? So we're looking for lower prices. So this was the SMT, right? We had the lower low, lower high, on S&P, and we had relative equal lows here, while Nasdaq at the same time it did a high. Let me make sure, like, so basically what, 1105, 1202, yeah, I believe those are the same ones, right? 11, yep, same ones. So this was people were looking at this as SMT, and sure, this was an SMT. The only thing is that, again, like I mentioned many times, it's all about time and price. I look at how long it takes to create liquidity pools, like relative equal lows, or even how long does it take to form for an SMT. In the grand scope of things, this SMT was not as strong. Yes, sure, it delivered short below these lows. Also, this was a great trade. If you just traded this based on SMT alone, this was a great trade. I mean, it delivered, it makes logical sense. Let's say you shorted this, I don't know, somewhere here, maybe your stop was here. This was a great trade. 2 point something R, maybe below this lows, right? I know. But also this happened, this SMT happened right at noon. And while I don't follow every rule ICT gives us, simply because, again, it's not required for my style of trading, and also because it feels sometimes good to be a rebel too, you know. But one of the rules that I definitely follow is no trading for me between the lunch hour. Between noon and 1 p.m., no trading for me. So I would not look at this as a, trading opportunity. Maybe if this was a little bit before 12, I would consider this a short. But again, SMT was not as strong. It was absolutely present. You can see both indices delivered nicely below this low here on Nasdaq too. But this trade, this SMT happened only across 1 hour, right? Basically, yeah, 11, 12. So it formed across 1 hour, while this whole structure happened across basically the entire New York session. So it took much longer to develop this price structure compared to these highs. So while this SMT was valid, it was valid only for a small retracement, but on the bigger scale, bigger picture, high time frame, 15 minute in this case, because again, I'm dealing with the 1 minute chart, so 15-minute time frame is my high time frame chart, okay? On the grand scope of things, this was just a small retracement just to go higher again. So there was nothing wrong with the short. It played out, absolutely. Again, just the timing was not good. But when I posted this already, all this stuff, it already happened. I'm looking still at the bigger picture. That's why I believed first Nasdaq will create a high, and it did in about 15 minutes after I posted, and eventually another high. And eventually S&P created another high also here, right? Honestly, I was not expecting this. But this is the logic. Again, nothing wrong with this trade, especially if it was, maybe before noon. You could totally take it and you would be right. And then if you were looking for buys, you would be right as well. But high time frame, again, dictates the narrative. That's why I stated I'm bullish. So the other trade that I took, let me just remove this. I think was much easier to understand. Again, if this buy here felt like, I'm chasing price, or you didn't really understand it, again, this trade would require more experience. But this, however, I think this was easy. We had our, basically trend line on S&P, 1 minute trend line. Market dropped below it. And look at the time of day again. We are at 3 p.m., right? And a lot of times in the ICT's videos, you would hear him mention that around 3 o'clock the algorithm can start spooling. And this is, in my understanding, this is what spooling is. It basically finally delivered, the higher high. It started just pretty much very shallow retracements going higher after this sell-side liquidity was taken. So again, the idea was simple. Sell-side liquidity taken, raid. Now we'll look for displacement and some kind of imbalance to enter. I entered on Nasdaq, again, only because I felt still Nasdaq was a stronger index, so it would deliver my objective faster. And it went below this low here and this low here, but most importantly, this low, right? So we had a nicer imbalance on Nasdaq here. and this was my entry here. I got actually lucky, basically almost no drawdown, pretty much. Yeah, I think my entry was literally right here, just a small tiny wick here, and then it started going higher. So my stop was somewhere, very tiny stop. No, actually I made it, I think it was, I know, well, on my broker I think it was about 10 points. Well, anyway, around here, doesn't matter really. So I went long here. I closed, I posted the screenshot also, I closed pretty much around here after we took out this high and pretty much were at this high. This was a great trade. I took partials along the way. If I didn't take partials, it would be pretty much a 5-hour trade, but you know, with partials it's less. And then I took another smaller position size here. This was just a scalp, also allowing for it for possibly maybe go lower one more time, but also close at the same time here. So this was a, well, still a 2-hour trade pretty much. This was good. We had this tiny little imbalance right here, you can see. So I just entered, you know, a little bit below it. Played out nicely. Again, I believed high time frame structure is bullish. S&P just took out a nice trend line. If you want, you can probably extend it here. So that's your trend line. It took it out. Also had a displacement, but a much smaller gap, but beautifully delivered inside of it, and also went higher. So this is the logic. I think this trade, my first entry here, is much easier to understand than maybe the previous trades. And I did not wait for this. Again, I just closed, I was done. So hopefully you understand the logic behind the trades, behind the bias, right? You have to consider, again, very important, the time it takes to form certain liquidity pools. While this SMT was valid, it was relatively weak. Price did in fact play out nicely, right, as you would expect from an SMT, but it was just a retracement during lunch hour to finally eventually go higher again, right, to finish our buy side delivery for the day. So that's the logic behind it. Again, let me think. Yeah, I think I covered pretty much everything I wanted to discuss here. So don't be discouraged if you still don't really, you know, if it's hard for you to grasp this. I think this type of analysis, when you compare it to indices and really notice subtle differences, it takes experience to notice, you know. If you just started learning this year, maybe 4, 5, 6 months in, you probably won't see this right away, but maybe after you've been doing this for a year and spending enough time on the charts, backtesting, forward testing, you should be able to spot this relatively quickly. Again, all it takes is just to look at 2 indices, and you'll see those things happening over and over again. This is your subtle clues that one market is stronger than the other, and for potential, you know, bullish or bearish continuation depending on the market. So yeah, hopefully this makes sense, and you just have to be agile. You have to be very agile and be able to adapt to how the market is changing, what the market is giving you in terms of price action. Again, 2 people can look at this on the 1-minute chart. There can be both buying opportunities and shorting opportunities. Nothing wrong with that. As long as I have a model that works for me, as long as I have the narrative and bias that makes sense for me, I'm entering the trade, and you know, if I'm wrong, I'm wrong. But if I'm right, most of the times I'm right. So that's how I stay in this business, right? That's how I pay myself. I don't care about anyone else's opinion. Again, the moment you stop caring about what others think about the market is, I think, when you grow exponentially, once you have a working model too. Like I explained to you here, in this small consolidation range, really, there were both buys and sells. So it doesn't matter. Whichever trade works better for your model, however you see the market, you can capitalize on it. If you understand the high time frame, that you should understand that if you short, this is just has to be a short, you know, a relatively small scalp in and out. That's the idea. Obviously, it's always good to trade in line, even scalp in line with the daily bias, but it's not always required. But if you are scalping against, you just have to understand that you have to get out early. You just have to be comfortable with 2.5, maybe 3R and get out. You know, not hold for long. So hopefully, again, this makes sense, and let me know what you think in the comments. I try to explain the easiest way that I can. Certain things, again, just come with experience. But for the most part, I think this is, I don't know what else to add. Again, so many confirmations for bullishness. That's why I went in and stated that I'm bullish. All right. So that being said, I'll talk to you next time. Take care, guys.